Hi everyone. Today let's take a look at the small caps as well as all the way through the monthly charts as we did get that monthly close this week. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at the small caps here, a big moment for small caps. We've been saying it for a while. I think small caps are the best opportunity in markets. They're undervalued historically, especially relative to their mega cap peers. But let's take a look at why they think so. They're pointing to things like interest rates continuing to come down, favorable policies in terms of things like regulation, as well as the growing economy. So pretty much the conditions are set for small caps to be the top performer. Inflation pressures have continued to weaken here, which has allowed the interest rates to come down, but we should see that continue to come down and interest rates continue to come down. The other thing they are pointing here to is investor optimism. We are seeing the Russell surge post-election, and we have been talking about it. It's been a very good week. We'll take a look at those charts later. But overall, small caps generally are more centered on the domestic market, less exposure to international trade, as well as currency fluctuations, and they shouldn't be nearly as affected by the trade war or potential trade restrictions in and outside of the United States. We're also looking at some potential tax changes that could help benefit these small cap firms, allowing the US economy to do a little better, and that's the kind of environment where we see small caps outperforming. Talked about regulation. The Trump administration is supposed to be a little bit more relaxed on regulation, taking out some of these regulations, allowing business to prosper a little bit more. Obviously, there are secondary and tertiary effects of those kinds of regulations being loosened, but from the business perspective, fewer rules means fewer costs, and fewer costs means these companies should be a little bit less burdened. They should have more capital to reinvest and facilitate that kind of growth. Faster growth, faster approvals process leads towards a competitive edge as well as speeding of revenue generation. And third, this could give them an advantage when it comes to capital markets, deregulation there, lower hurdles for getting capital into their business, allowing them to scale more effectively. And finally, that generates more flexibility in their operating environment, again, allowing them to be more nimble and enhancing their overall competitiveness. Interest rates, we talked about it. Lower interest rates generally leads to higher price to earnings ratios, especially on the small cap side. And then they point to consumer sentiment. Consumer sentiment has been trending a little bit higher, and you can see the Russell has been trending with it. Did see a little bit of a pullback here. This chart goes through mid-24, but we do expect this to kind of turn up into the Black Friday consumer spending holiday time period, and the Russell has been going in that direction. We expect the consumer sentiment to go that way, and so far there has been quite a bit of optimism around the new administration, new policies, which has been good for the small cap stocks. So small caps seem to be the place to be, at least for now. Looking at fear and greed, we finished the week at a 66. A week ago, we were at a 60, and some of these indicators are definitely concerning. You can see extreme greed on momentum, right at these all-time highs, just a little bit above them. Strength showed a higher low, and now it's rallying out of it, so that's a little bit of a bullish indicator. Looking at breadth, also gaining here, pointing towards that bullish indicator. Fear on the indicator, but trending out of it. Put call ratio, this is probably the most concerning to me. It is at a very, very low level. We never see it go below this 0.61 level, and that's usually the turning point for markets where you can see these big kind of spike ups. Last time we were here, we spiked up, and now we're here again, waiting to see if we spike up again. Volatility, it's at a low level, but it can stay at these low levels for a long period of time. You can see we got here in May, and we didn't leave here until July, mid-July. So this can stay here for a while, not really an indicator. And then safe haven and junk bonds sitting in regular greed. These have been starting to go a little bit higher here. You can see junk bonds finally trending into regular greed. Not super good indicator. The most concerning to me is this put call ratio. Looking at the AAII survey, you can see the bulls are continuing to get squeezed. We're back into that historical average. The bears are starting to accelerate, which is interesting. We did see rallies into the Wednesday, Friday, but despite that, the bulls are getting squeezed. The bears are expanding. We're finally seeing this kind of trend in this direction. And as this pushes towards that really high level, you can see this is a 1-year peak for the bears at 38.6. I do think this is going to start to trend a little bit more that way. We haven't seen markets roll with it quite yet, but if this continues to go, markets are probably going to go with it. Moving over to seasonality for December, you can see a little bit of a rally here into that first week, slightly choppy into the mid-month, and then end-of-year rally from mid-month through New Year. And you can also see they're pointing to some small cap outperformance, which is your red lines outperforming here into the end of the year, especially on election years. Really strong push, 3.5% potential for the month. So Russell potentially going to continue to outperform. It's been holding up quite well. The rest of them still fairly good here at 1 to 1.5% in this range. Overall, it is a bullish period for markets, even though the first half of the month might be a little bit choppy. And then looking at the calendar here, you can see that first week, no major indicators, definitely some economic calendar stuff, though. We'll take a look at that on the next charts here, but relatively flat, bullish on the 9th, small cap outperformance into the midweek. And then we have a quad witching into the Christmas time period, as well as that FOMC meeting. Overall, this mid period is generally bullish, just like we saw. So nothing major, little bit of mixed markets on that first week, but everything else looks good. Moving over to the economic calendar, nothing here for the Monday. Looking at Tuesday, you get some economic data, ISM manufacturing PMI, prices, manufacturing, global US manufacturing PMI. And then for Tuesday, we get jobs, JOLTS job openings. This is an employment week. A little bit of data here for the Eurozone, S&P Global Services PMI, non-manufacturing PMI, non-manufacturing prices, crude inventories, fairly interesting. And then you got Fed Powell speaking on that Wednesday at 1:45. And then looking at Thursday, not a whole lot. Initial jobless claims continues to be interesting. And then for the Friday, GDP for the Eurozone, and then all of that unemployment data here on the 6th, non-farm payrolls, as well as that unemployment rate, which is expected to step back up to 4.2 from 4.1. That's definitely concerning. That could send a little bit of a bearish signal into markets. And then you do have the Michigan inflation data, consumer sentiment, fairly interesting. But the big one, of course, is that unemployment rate. Moving over to Max Pain, you can see Max Pain for the end of the week is down at 590, current stock price 602.66. So quite a bit of downside potential to get down to that Max Pain area. Right now we're sitting just a little bit above it. I could see this drifting a little bit lower. And that's shown here with all of these expirations. Down 1% pretty much all week, and quite a bit lower here for the Friday session. Doesn't fit with seasonality. Again, we could see a continued bullish trend where all of these stay to the downside. But you can see out here for the 11th, a little bit bullish there. Otherwise, the rest of these are pretty bearish out until mid-February, end of February time period. So see how that affects markets. So far, markets have been very bullish, staying pretty much right at the top of the put price action, which right now is in that 600 to 602 area. Moving over to the charts, looking at the S&Ps here on the monthly. So far, this month has been bananas, 5.7%, super bullish momentum, super overbought, and RSI there at a 74.6. The only trend that I even have up here at this point is sitting all the way up around the 6,200 here on the SPX. Really powerful month, one of the best we've seen in a while, going back all the way to May, which was about 4.8%, and that was following a big down move on the April candle. Saw a big one here as well, November of last year, after we saw basically 3 consecutive months of downward price action, big push out of that. So very powerful month. We'll see if we get continuation out of it. Up to that next trend line's about 3.2%. If we got that for the next month, that would be really solid, especially with how powerful everything continues to look. Jumping down to that weekly chart, you can see it here. We were looking for a little bit of a rejection potentially back down to this trend line, ended up gapping sideways and rallying. New all-time highs here on the weekly, momentum still bullish. RSI continuing to show that divergence. You can see obviously we are at all-time highs with the RSI a little bit lower than it's been at a 66.95. Peak RSI was back here in July at a 77.69. We also saw some really high numbers here, 78.98. Again, much lower prices. This is triple divergence at this point. Waiting to see when this tops out. Are we going to push to that next level? Seems fairly likely over the next 2 weeks. We'll see how it plays out. Again, super bullish period. We'll see if that carries into the end of the year as well as next year. But looking at it here on the daily chart, you can see we rallied up, held the level, retested, continuation. Should push to this trend here around 61.41. We'll see if it continues in there. And then looking at the SPY here on that daily chart, you can see the critical level was 599.64. We ended up holding that level on the Friday open and then pushing right to the trend here that we've been watching. Waiting to see if this breaks out of this trend and pushes up to that 614, 615 area on the SPY. So that gives you a little bit of something to work with, but the longer term charts at this point just aren't showing us much of anything. Let's go ahead and extend this out here. If we pushed through to these levels, that would give you around 623, maybe in here 618. Again, continues to look very, very powerful to the upside on these short time frames, but those longer time frames are looking very, very extended in my opinion. And then moving over here to the Tasty charts on the monthly, you can see just how massively extended we are, way, way above that upper ATR band. That's currently sitting at 576.45. Obviously, that'll step up here a little bit for next month, maybe into the 587, 585 area. But again, we're still way above that at a 62, super, super extended. We've been extended for a while with how aggressive this rally has been. And this chart goes back 10 years here, and you can see the only time that we've been relatively extended similar to this would be the candle back here in January of 2018. Got really extended, and then we had 2 more months of downward price action back to that 8 EMA, rallied back up to that upper ATR band, and then we saw a really big sell-off here into December of 2018. So something to consider there. Otherwise, this most recent rally into the previous peaks, 2022 area, hit those levels and then pulled back from there. And we are once again very, very, very extended here on the monthly chart, in my opinion. Weekly chart, again, you have a little bit of room to that upper ATR band. That's at that 614, 615 area. You can see right in this region here, 615.20, somewhere in there. So you do have basically the same areas as that previous chart that we looked at in terms of trend resistance. And then looking at the daily chart, that short target would be that upper ATR band. That's at 608.71. Last time we touched it, we pulled back to the mid-range and then continued higher. That would be your higher high here on the SPY. Technically, we're above this just by a little bit. This was at that 599 area. We are at 602. So it's technically already a higher high, but I would expect a little bit more out of it. You can see the momentum has already turned bearish on the volume, so people are selling into this rally, something to consider there. Moving over to the NASDAQ here for the monthly view, again, you can see 5.23% momentum back to bullish. RSI still super overbought at a 73.45. The RSI indicators are not as bearish here on the NASDAQ. You can see peak RSI previously 71.54. We did see a 71.5 there. Now we're at a new all-time high with a higher RSI read. So supposedly that is still okay in terms of divergence. In terms of levels, we're right at the trend here. Critical point 20,918. Rallied right to that level, closed at it. If we hold and push, your next trend lines are not up until that 23,000 area based on this monthly chart. You can see the structure that we've been watching for a while. Right in there, that would give you a target around 23,090. Overall, still looks a little bit bullish here. Jumping down to that weekly chart, you can see 0.74 on the week, pretty decent, right at the trend line. Momentum still bullish. RSI, this is where the divergence does start to show up here. You can see RSI for the mid-July timeframe, 73.95. Price action just above those levels, and it's at a 61.88. So we're showing higher price action with lower RSI reads on the weekly charts, critical level there, waiting to see if this area rejects. Last time we pushed through it and eventually fell. Might push through it one more time and eventually fall. We'll see. That pulled back all the way down to this trend line here. We talked about it last week, I believe. That trend line is all the way around 12.5% lower. We'll see if that ends up coming to fruition or not. Right now, again, still looks a little bit bullish. And then zooming into that daily chart, you can see we're still watching this kind of bear flag type setup. This setup is still intact on the NASDAQ with that breakdown consolidation. It's taken a long time, but we're still in that same trading range. Momentum stepping to bullish, RSI stepping back above the SMA here. So this does look a little bit more bullish on the daily charts than it did on the weekly, in my opinion. And stepping down just to the hourly here for a moment to show you that same structure. We're within this structure here. The lowest trend line is what's holding right now. Short time frame target would be that 514.92 area, potentially a little bit higher, 516, somewhere in there. Overall, for now, if it gets above this trend line at the 510.50 area, then I do think we're going to get a nice little push. If it rejects from here, this is going to be a consolidation, rejection, triple rejection from that trend line, and then a breakdown, and then we could see that bigger 12.5% down move that I just talked about. Then moving over here to the monthly on the Tasty charts, you can see that upper ATR band is currently a resistance. That's at 515.32. The high of the week was 515.58. So we touched that level and then rejected from there. We're still hanging out in that zone right at that upper band. Again, remember that'll step up next week, but we've been grinding along this level for a couple of months now. Doesn't look nearly as extended as the S&Ps, but if the S&Ps do break down to those levels that we talked about, that's definitely going to take the NASDAQ with it. But at least on the charts, the NASDAQ looks a little bit better in terms of overextension. And then looking at the weekly chart here, you can see these ATR bands are definitely flattening out. We've been talking about it for a little bit now. This is clear uptrend. You can see up and to the right, and now you can see those last little bits here are starting to roll to the downside on those upper bands. Lower bands still trending up slightly, but flattening out. Momentum still a little bit bullish in here, but definitely concerning to see those upper bands flattening out. Let's see if we can find another example of when we've seen that. The only other times that I can really find something like that is in here back to March of 21. Did see a little bit of a pullback here, and then we did get a little bit of a pullback in markets. Remember, these are weeks, so that was 4 weeks of down move. And then looking here, you can see we did have a long consolidation, and then once these did start to roll over, markets had already moved lower. So it's a little bit of a different kind of setup, but to me, this is kind of the beginning stages of a potential down move based on those weekly ATR bands. And then looking at the daily chart, you can see that structure did hold up really well, and I am looking for a little bit more of a push here to that next ATR band. The second band would be 517.53. I do think we're going to get a little bit of an acceleration, at least in the short term. Remember, it is a bullish seasonal period. Once we hit those upper bands, though, I do expect to reject from there, just like we did in here. We'll see if it ends up doing it or not. For right now, it does look like we could push back to that upper band. We did have the low, higher low set up here. We ended up holding in here, looking for the bullish push off the Friday session into those upper areas. Based on the daily chart, that would give you a target in the 524.50 area, which seems a lot higher from here, but who knows? Markets have held up really well. Moving over to the Russell here on the monthly, 11%, absolutely massive. Blew through all these levels here, clean break above that 229 area, which was the top of this consolidation back from August of 21 before we had the bigger breakdown. So rallying back up to the trends, new all-time highs, everything looks very, very good. Current price target would be this 252.50 area. Momentum bullish, RSI continuing to trend towards overbought conditions. Let's see, last time we hit overbought was this consolidation here before we had the breakdown. Now we're finally rallying back up to overbought conditions, and it does look very, very good. Not quite extended yet. Looking at the weekly chart, it was a positive week, 1% higher, but we did gap up doji. So the concern here is that we do get the gap down and then we see a little bit of a retracement. Going back to that monthly chart, the only thing that I wanted to highlight here, you can see the big up week, 10.3%. And then the previous month, we did take out that entire week, created a lower low before bouncing really aggressively, chopping sideways, and then getting the continuation. So there's certainly a possibility we could kind of break down, round trip the move back into this 218 area, hold the level, and then continue higher. So do keep that in mind. The Russell can be quite volatile. Otherwise, gap up doji, waiting to see if we get the continuation up to those 253 areas, or if we gap down, retrace some of this, at least in the 229 area, maybe even lower, hit the 21, maybe lower than that. You can see moves like that where you touch the level, then continue right back to that higher high. And these moves can be substantial, just like we talked about. That was a 20% move or so on the weekly chart, established that lower low right at these previous levels here, and then ended up continuing higher. So definitely something to watch for. Overall, though, this trend is still up and to the right over the medium term. Moving over to the Russell here on the Tasty charts, you can see that upper band would be your target on the monthly at 252.31. So pretty much in line with those trend lines that we talked about, a little bit higher, about $11 higher into that zone. Then we'll see what happens. That was where we rejected, chop sideways, pull back in time. Then you got that big down month, which did kind of culminate towards that 89 EMA. If we did see a move from there, that would be around 253 back down into that 178, 179 area. Are we going to fully round trip? It's always hard to say, but something to consider. The risk will absolutely be to the downside once we get into these upper levels, which I do believe we're going to do. Again, that's about $11 to $12 higher. But once we get there, the risk is absolutely to the downside. And then looking at that weekly chart, those upper bands here, 253.43, pretty much in line with what we saw on the monthly charts. Momentum bullish. Again, big volume on the up week. Still says that this is going to continue higher. you never know if we're just going to reject from there or not. Maybe we could grind in that area for a little bit, certainly a possibility. And then looking at that daily chart, that upper band is a little bit tighter here. So that's 213.35. Maybe we kind of grind into that area, chop sideways slightly higher here. As we get closer to that 253 area, I do think we'll probably reject once we get there, but a couple of days, a little bit of grinding price action, upper band, like I said, 246. Could take a couple days to get into that 253 area somewhere mid-December. Then we'll see what happens. Are we going to reject from that area, get the kind of medium-term pullback, higher low setup, and then continuation from there? Hard to say, but for now, looks like we're going at least a little bit higher. Moving over to the Dow, look at this chart here on the Dow. Absolutely massive, 7.8% for the Dow. One of the best performers, outperformed the SPY and the NASDAQ. Not super common to see that, but the Dow taking off, hitting these upper trend lines. I don't have anything really above here. If I zoom out a little bit and extend this trend line here from this kind of consolidation grind higher, that would give you maybe a target somewhere in here around 476.50. That could be maybe something to work with in the medium term, but we are at these critical levels. You can see it here on the weekly chart, a little bit clearer, right at this upper trend line, almost to the penny. We are in this area of rejection. We're definitely overbought at a 71.37, waiting to see if it rejects from here or if we're going to get a continuation push. It's all price discovery. We gapped up and rallied 1.5% for the week. Everything looks super, super bullish. The key zone was here, gapped through it, rallied, basically doing everything you would expect if this rally is going to continue. And based on that, you have to trade the price action you have, which is bullish. Looking at the equal weighted S&Ps, again, quite bullish, 1.13%, momentum bullish, almost overbought at a 67.91 on the RSI. If it breaks through this trend line here, your next target would be the trend up here at 191.87. This is not really a trend. It's really just the same parallel line marked at the high from the 29 July week. Could give you something to work with. Maybe you want to bring it down a little bit, mark these tops. If we were to do that, that would bring it to about the 190.50 area, pretty much in the same vicinity, but maybe a little bit better trend line, something to work with on the short time frames here for the equal weighted S&P. Either way, still looks bullish, up into the 190, 191 area. Moving over to the ratios here, SPY, Russell, NASDAQ, SPY. You can see the Russell was outperforming all week. And then that last day, we did have a huge push on the SPY where the Russell was basically flat. And that brought us back to flat on the week, 0.11 to the downside. So slight outperformance from the Russell. Either way, for me, this is continuing to trend lower. I think we're probably going to get into the 242 area. So we should see a little bit more Russell outperformance, despite the NASDAQ doing quite well this week, especially into the end of the week. And then you can see the NASDAQ falling versus the SPY. This is truly downtrending here for me now. You can see 921, probably going to see those cross. The 55 is above it. We talked about that. We got the cross back here on the 4 November week. NASDAQ continuing to underperform a little bit, which is definitely why I'm being cautious there. So bullish Russell, a little bit more bearish NASDAQ. We've been seeing it on the charts. It's just not showing that same kind of strength. We've been in the same choppy region for a while. You can see we hit this price action back here October of 23. And we are still here in December, November of 24. So relatively flat price action. You could argue maybe this is distribution at this point with a peak, pullback consolidation range starting to sell here. So maybe the SPY outperforms a little bit. Everything's been going up, so it hasn't mattered a whole lot. But if we see markets roll to the downside, you definitely want to be out of the ones that are performing the worst. Or maybe you want to short the ones that are performing the worst and just stay out of the ones that are doing the best, because everything would be falling at that point. So we'll see how it plays out. Right now, seems like the Russell will do the best and the NASDAQ will probably do the worst. Moving over to the SPX divided by the M2 money supply. Again, continuing to see that bullish trend, obviously looking for a touch of that 28.50 level. Then we'll see what happens after that. Again, same divergence we've been seeing. Peak RSI goes back to February, lower RSI in July, lower RSI now as price continues to go higher. So it is what it is. Price continues to go higher, so you have to trade what you have. Eventually this will break down. It's definitely in triple divergence, but overall still going higher, looking for that touch here, 28.50. And then if we did push to the trend is all the way up pretty much in this next zone at that 30.14 area. And And remember, these levels do go all the way back here to the dot-com bubble. That's how extended we are historically. On the SPX divided by the M2 money supply, 3014 is in this nearly peak price area. All-time high for this ratio is 3271. It would be bananas to see that happen again, but that was the all-time high. You can see this consolidation. And then from this 32 area, we did see a massive pullback all the way down here into the 14 area. That kind of a pullback, 57% or so, which was much more in the regular markets. A lot of stocks were getting cut 80 to 90% during that retracement. So something to keep in the back of your mind. Is that going to happen again? Who knows? Is this a new historical shift? We haven't seen it. Remember, 14 to kind of this 22 area is the normal range. We are very extended. I still think this is a bubble. So we'll see how it plays out. Right now, markets are bullish. Medium term, probably not a great time to be buying everything, especially tech. If you're buying real estate or dividend payers, still think you're probably in good shape. Moving over to Apple and Microsoft. Apple had a great week, 3.25%, right to those all-time high levels, 237.23. We did close above it by 10 cents. The trend is above it here at 239.45. Momentum swinging to bullish, RSI swinging to bullish. Weekly chart says Apple should be going higher. Step into the monthly here just for a moment. You can see that RSI is at a 69.14. Monthly close is a new all-time high. But in terms of price, we're right at that peak from the previous month. And then looking at Microsoft here, 1.55%, still in the same exact trading range we've been in for a while. We got here in July. We did have a couple of wicks in either direction. We're getting into a very tight range for Microsoft, waiting to see which direction this is going to break out. In my opinion, probably going to break down, but so far it's held up really well. 55 EMA continues to be support on the weekly. We're back above all the EMAs and SMAs, but again, we're in the same trading range. Need to see it hold above 429.88. If it does that, maybe we can see it kind of get in here and hold, see kind of a push there, but for now, consolidation, tight trading range, and it seems to be getting tighter and tighter. Moving over to Tesla and NVIDIA, you can see Tesla was down 2.1%, NVIDIA also down 2.6%, hanging man candle. Caught a little bit of a bounce into the end of the week, but my guess is both of these are probably going to go a little bit lower next week. Still looking for NVIDIA to touch the weekly VWAP there at 128.90, my level 130.35. Want to see those get touched at least. 21 EMAs below it, 126.16. For me, it looks like NVIDIA is rolling. We're right at that 9 EMA, 138.27. Did close just below it, 138.25. So to me, NVIDIA is going lower. Tesla, on the other hand, continues to hold up quite well. It is a hanging man candle, but you can see we had slight bearish candle, continuation higher. Whereas NVIDIA, bearish candle, bearish candle, bearish candle, probably going to see a little bit more here in my opinion. Also momentum swinging back to bearish, RSI breaking below the SMA on NVIDIA. You can see that divergence continues to look quite negative on NVIDIA, whereas Tesla is in bullish momentum. It is extended, but the trend is still bullish here. So Tesla looks okay. Might go a little lower and then continue higher. NVIDIA probably going to roll a little bit lower in my opinion. Moving over to Amazon and Alphabet, positive week, 5.4% for Amazon. Google actually did okay at 2.35%, still cannot get above that 170.95 level. Tested it here. You can see the breakout, retracement, full round trip of that move, slight bounce into this zone. See how it plays out. Obviously, Google has that DOJ investigation hanging over their head, which is a big uncertainty for their company. Structurally, this looks okay. We're above all the EMAs and SMAs, round trip the move. Maybe we get a continuation off of it. But if I had to pick between these two, Amazon looks much better. Probably going to push back to that 212.25 level. The all-time high is from the 11 November week, which is here at 215.90. We'll see if we can get there. Right now, looks good, at least for about a $5 push to this zone here. Then we'll see what happens. The trend is right in there. Let's go ahead and extend that out. The trend for the following week would be slightly higher, 213.60. We'll see how it plays. Momentum bullish, RSI bullish. I think Amazon's probably going to go a little bit more. Moving over to discretionaries and staples. Staples had a great week, 1.69%. Still think this is pushing back to those all-time highs at 84.53. Momentum bullish, RSI right at the SMA. This could be a zone of rejection, something to watch for here on the weekly, but either way, this structure looks very bullish. I think we could go a little bit more. And then looking at discretionaries, bullish week there as well, 1.93%. New all-time highs, closed on the high, momentum bullish. It's very extended at a 74.97, but you have to trade the price action you have, like I've said many times at this point. Let's go ahead and extend this out. Maybe that gives us something to work with. I'm working off of the low back here from the 18 April week of 22. That's the price that I'm trying to match in there. And that would give you a price target up here in the 234.80 area. Obviously, we're at all-time highs, so there's no horizontal levels to work with. But in terms of structure, that could give you something to work with, the 234.80, 235 area. Momentum still bullish and heading to bullish here on both of these. In terms of sectors that continue to be absolutely bananas, you have financials here as well as communications. Both of these are straight rocket ships, just trending higher every single day, it seems like. You can see financials over the past couple of weeks has rallied about 25% since mid-August or so. Big move there. Everything looks very, very bullish. Continues to be very extended. You can see RSI at a 77.75. Huge move there for financials. Just over the past couple of weeks, you can see this has been over 10% in the month. So very, very powerful. Obviously all-time highs, obviously price discovery. And then looking at communications here, broke through this trend. It was grinding on here. The next trend is all the way up in that 103 area. Continues to look strong, momentum bullish. RSI, again, super extended, 76.44. Everything just seems to be very extended, but also looking bullish and continuing to want to rip higher. So see how it plays out. Everything looks very bullish. Moving over to RIOT and Marathon, you can see RIOT had a nice week, 2.76%. Mara also having a good week, 5.38%. Mara at this point looks like we could get to this 32.95 area, which I do think is possible. Momentum bullish, RSI bullish, big volume here over the last couple of weeks. But the bigger move here, you can see this big move into this 54 area, and then we did touch this 82.58 area. If we did get a run like that into those zones, that gives you like nearly 100% potential, somewhere around 192% potential over the coming weeks. Would that be sustainable? Absolutely not, in my opinion. But right now, you have a base. We're starting to get above this kind of consolidation highs. If it closes above it in here, I think there's a definite potential for a massive run on Mara. Similarly here on RIOT, you can see 1870 is a key level. If we break through some of these levels, get in there, that's a potential 45% runner here. So something to consider here on RIOT and Mara. Both of these, again, super, super volatile. So play them with a little bit of discretion. But for now, they both look like they could go on a run. Moving over to 20 and 50-day breadth, both of these had a nice gap up, kind of a gap up doji on both of them. 20-day did rally a little bit, but nothing crazy. 86.50 is the level. You can see this is a key zone. We can hang out here for a couple of weeks. You can see it here. November of 23, stayed here until beginning of January. Kind of that same time frame where you can see kind of grinding price action. But understand this is a key zone. Once you get here, usually that's the turning point. You've seen it several times. Got here, turned, got here, turned. Again, can hover for a couple of weeks, but usually it doesn't go too much higher than this. And then looking at 50-day breadth, we're not in that same kind of setup here. You can see we got to that 68 area. The peak zones are between that 83 and 92 area. Once you get here, you see those pullbacks, got here, pulled back. So right now, looks like we could continue back into these extended areas. That's where you get the 20-day hovering, waiting for the 50-day to catch up. And then once you get into these zones, that's when you start to see those breakdowns. So for right now, probably an okay shape. Momentum swinging to bullish, RSI just barely above the SMA, looking to swing a little bit higher. And then we'll see that push into the zone, and then we'll see what happens from there. Moving over to 200-day breadth, we've been talking about this for a while. We've been flat for nearly a year. So we got into the zone 11 December last year, and now we're here once again, start of December this year. So markets have been very, very tame on 200-day breadth. Continues to stay very positive, 76.04 area, positive week, 5.8%. Again, this is a fairly critical zone. You don't generally get higher than this for very long. The only exception was coming off of COVID, had that kind of COVID peak. Then we lowered quite a bit into the market peak was actually here in December. And then once we saw breadth fading while markets were going higher, that was a big indicator that markets were changing structure and were going to go lower. So far, we haven't seen that yet. We've kind of been in the same trading range for a while. You could argue maybe we held a higher low in here. So again, market's not showing fracturing yet, but in a key zone. Moving over to put call ratio here on the daily chart, I just wanted to highlight, you can see the put call ratio has actually been going a little bit higher here for a couple of days. Wonder how they build that fear and greed indicator off of, but you can see we're at a 0.88. This is starting to accelerate a little bit higher. Throwing it on that weekly chart, you can see we did wick the previous week's lows, continuing here back into the mid-range. If we start to see some spikes higher, that's usually an indicator that markets have gone a little bit lower. Right now, we're kind of in that mid-range, generally where we have been for long periods of time. You can see That's where we've been for quite a while. But the interesting thing is that we wicked the level, caught a bounce, starting to see this trend up. And while the trend is happening, that is usually when markets are moving lower, and then you hit these key zones, and that's when markets tend to go a little bit higher from there. So right now we're starting to see a bit of a swing similar to what we saw on the AAII survey. Moving over to yields, you can see yields are finally dropping off. 5 days in a row of downward price action on the 2-year. 10-year basically the same with 1 up day, 2 days down before it, 1 up day, and then 3 days down after. Continuing to fall, we talked about how they had no business being this extended to the upside. Now they're starting to pull back into the more normalized range as we head into that December FOMC, where markets are expecting another cut, which should pull down that 2-year. I don't think markets are going to see another raise in yields, so probably should expect this to come closer to that 4 to maybe a little bit lower, waiting to see if we hit this 407 area. As this continues to fade though, that should give equities a little bit of strength, which is probably why we saw the SPY rallying so aggressively on that Friday. Yields were tanking pretty aggressively and accelerating to the downside. So yields going lower, dollar going lower, presented some strength for equities. Speaking of the dollar, you can see that weakness that we've seen going back to the Monday session. Down move, gap up, fall, 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 fall. So a little bit of down move, hit the key resistance, falling a little bit below the 21, close to that 105.5 level. Looking at it on the weekly chart, big change. We've had many weeks in a row of bullish price action. Now we got a big down week, 1.5%, momentum stepping down, RSI stepping down, looking for at least a retest of the SMA, which is down in that 50 area. So still could probably get the higher low, pull back into this maybe 103 area, but as this is falling, that should give equities a little bit of bullishness. So short term, bullish for equities, medium term, probably bearish. As this dollar continues to show strength, which I do think that it will do off of this kind of move. We have seen some pretty big down moves, kind of like this, where you get straight up price action, consolidation, big move down, retraces nearly that whole move. So could do something like that, but based on what I'm seeing here, I would expect a higher low setup continuation move. Moving over to bonds, you can see bonds had a good week in both cases, 0.73 and 3.96%. I've been saying to buy bonds medium term. I think this is going to continue to go higher. Yields are rolling over. Equity should be going higher as well as bonds. Momentum swinging to bullish. We've now seen it on the weekly chart. Our side's right there at the SMA. So if it's going to reject, it'll probably do it here. But at this point for me, I think this is going to swing into that 144 area up in the 101.37 area. Again, I'm not a huge fan of trading these short term, but medium term, I have been buying bonds, and I do think bonds are going to be a good asset, especially relative to how extended to the upside we are across most of the major markets. Moving over to the VIX, you can see big down week there, new close right off the wicks from 2 weeks ago. That bounced from that level through a lower high in here around that 1850 area. And now we've had 2 down weeks in a row, getting back into this consolidation range. Support for me, 1275, probably going to see a touch of that zone, which again, gives you a little bit more bullishness before we get there. And again, similar to breadth, you can see this hover in this area for a while before we see spikes. It's not like we're going to find support and then spike up immediately. So seems like the VIX has kind of faded into this holiday rally, consolidation, then maybe we see a bounce into first quarter, maybe second quarter next year. Moving over to my accounts, I traded really poorly, lost about $900 on the week when the markets were up, so super frustrating on that. In terms of positions here, you can see covered call on the IWM at 243 for about $1 credit there. And then looking at the Qs, 200 shares, but I do have some calls stacked against it. This is still a bullish position on a net. You can see 93 deltas, but I do want to stay protected as we are in that key area of resistance. If it breaks through there, I'll take these calls off and then look for a push into that 515 area, but for right now, everything looks a little bit bullish, and that's the way that I'm trading it starting next week. Let me know down in the comment section what you think of small caps. Are you buying them? Are you trading them? Are they the place to be over the medium term, or are you still buying Mag 7, mega cap style stocks? Let me know. It's probably not one or the other. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.